This is FinTech Futures at Sibos, and I'm joined by Jason Harrell of DTCC. Jason, thank you so much for taking the time out to come and speak with us. Just get started, let's give us a quick introduction to yourself and your role at DTCC.
Yes, Jason Harrell. I am the head of our external engagements group. We're responsible for policy and advocacy for several areas, including cybersecurity, resilience, new and emerging technology, and financial digitalization.
Excellent, excellent. And cybersecurity, obviously a big theme at this year's Sibos. What would you say are some of the most prevalent cyber threats then at the moment? How has this been evolving over the recent years?
Yeah, I mean, it's been great to be at Sibos, first of all, and being in Toronto and enjoying the city. Cybersecurity, of course, has been a top 5 risk for a number of our clients. So I'm not really surprised that it is a top 5 risk that is being focused on here at Sibos. I think that the maturation of the financial markets has really put a lot of pressure on firms to actually manage cybersecurity risks. And then I would say the 3 major things for that maturation that have impacted how we look at cyber risk is the interconnectedness of the financial markets, new and emerging technology, and third-party and supply chain risk management. For interconnectedness, the financial markets are more interconnected than they ever have been. And so what you have is potential impacts that happen in one jurisdiction can create impacts in several other jurisdictions or outside of the member states. And so it has an opportunity to create a real ripple effect across the financial markets. For new and emerging technology, we continue to use new and emerging technology to either modify existing products and services or to develop new products and services. And with those new technologies can introduce new risks that we still have to manage. And then lastly, with third-party and supply chain risks, what we have is an increase in the surface area that can be used to attack financial institutions. And then for commonly used third parties across financial institutions, those represent points so that can also create impacts across the financial services sector.
Excellent. And the rate of change in the cybersecurity space seems to be ramping up every day. I mean, do you expect this to continue as well? And what kind of new threats should businesses be looking out for?
Yeah, so when I think about the current threat landscape and what's happening in that space, I feel as though as we continue as financial institutions to adapt our controls and to understand how we're being attacked by different threat actors, then those threat actors, modify how they in turn attack the financial institutions. So it's a cat and mouse game, really. And I look at it as that's going to just continue. I don't see that changing at all. But what I will say is that I think there's 2 threats that I see really being, how would I say, more prevalent, and what I see will be more prevalent going forward. One of those is the impacts of nation state or state-sponsored threat attacks, as well as the use of AI in cyber threats. For the first one, the geopolitical environment has always generated significant impacts to the cyber threat landscape. And so as geopolitical tensions continue to rise, I expect that we'll continue to see increased attacks from those threat actors against financial institutions and other critical infrastructure. And it is the sophistication of those attacks, as well as the funding for those threat actors, that creates a real problem, not only for smaller institutions, but even for some of the larger institutions to be able to defend against. For AI, we're already using AI. AI is included in a number of the cybersecurity products that we use to protect our networks so that we can identify anomalies, we can identify changes in attack practices from different threat actors. So it provides us as security practitioners with a real benefit. The flip side of that is it also can be used to generate and develop new attacks as AI learns. And so there's also the potential impact that I see where, you know, the threat actors that are continuously trying to attack our financial institutions will get better and have more knowledge based on the information that they get from AI models. And so that will have the potential to accelerate some of the attacks that we see.
And are there any industry-specific benchmarks that financial institutions can use to measure the effectiveness of their protocols and their cybersecurity risk management practices?
Yeah, so one of the things that I want to, just make note of is that financial authorities and financial institutions have actually been partnering to, one, better understand the potential impacts that are facing the financial services sector and potential policy solutions that can be put in place to help raise the floor on the preparedness of financial institutions. So one of the challenges that we've had within the sector is you have a cyber risk program that is run by your IT and risk organization, and then you would have all of these rule makings that you would need to adhere to for compliance. And so how do you bring those two worlds together where, you understand how your cybersecurity program is actually meeting your compliance obligations? So to address that challenge, one of the activities that institutions and financial authorities worked on was the development of the Cyber Risk Institute Financial Services Profile. And what that did was it took the requirements and the efforts that we were doing in cybersecurity and the frameworks we were using for cybersecurity. So the National Institute of Standards and Technologies cybersecurity framework and the ISO's 27000 series frameworks. And what they did was map the regulations to those frameworks. And what that did was it provided a facility for financial institutions not only to understand where they may have potential gaps to their compliance obligations, but it also allowed them to benchmark and measure how they actually meet their compliance obligations, and then be able to demonstrate to the financial authorities. So it helped everyone all around, and so it's one tool that I feel that financial institutions have been able to use to improve and enhance their programs.
And just to finish off, how has the regulatory landscape then around cybersecurity and third-party risk management been evolving recently in financial services?
As the threat landscape changes and we find ourselves in an environment where we have increased threats and we have to react and respond, of course, the regulatory environment also has to then review its rules and guidance that it provides to us as financial institutions to make sure that they're aligned. And, are there things that we should be doing as a financial services sector that aren't included in the current rulemaking? So again, there's a number of activities that are being worked on between the financial authorities and financial institutions through their public and private working groups. There's probably more than I have to count, but I will talk about three of them. One is the European Union's Digital Operational Resilience Act. And so what that act did was create a consistent minimum requirements for cybersecurity controls across the European Union, and really kind of eliminate the ability to have arbitrage and, hey, I'm going to operate in this member state because they have less cybersecurity requirements in this member state. So, there was a lot of partnership that went in with working with the Commission, the Parliament, and others to get to a place where the Digital Operational Resilience Act was enacted, which happened earlier this year. And now we're kind of working through the technical standards that will be used to actually outline the exact controls that financial institutions have to put in place. The second I'll bring up is the Financial Stability Board's third-party toolkit for financial institutions and financial authorities. This is really being put in place so that, one, it can lift where we are currently from managing our third-party risks, and then expand the coverage of what we may need to do when we're not just looking at third party, but also the supply chain. So those fourth and fifth party risks, how do we actually have better insights into the risks that we may have there from the use of particular fourth and fifth parties. And then lastly, the U.S. interagency guidance. So in the U.S., we used to have the third-party guidance from the Fed. We had third-party guidance from the OCC. We had different third-party guidance from the FDIC. They're all very similar, but they have their differences. So instead of having three different guidances, we work together to have one set of guidance that both combine what the minimum requirement used to be to those added controls that we need to put in place for third-party and third-party risk management. And so that's been very helpful as firms try to streamline the number of regulations that they have to adhere to.
Excellent, excellent. Well, thank you so much for taking the time out to speak to Jason and share your insights. It's been a pleasure.
Oh, it's been a pleasure, and it's great to be here at Sibos, and thank you to FinTech Futures for the opportunity to talk about it.
Thank you so much.